Welcome to the weekly pivot for October 26th, 2025. So today we will talk about upcoming key events, and then we're going to go straight through our SPX analysis, including a review of last week. That way we can kind of keep the context all connected together. So coming up, we've got a pretty big week. This week we have FOMC on Wednesday. We've got Mag 7, 4 of the Mag 7 earnings throughout the week. And then we've got PCE and, of course, the tentative deadline for China trade on Saturday. So a lot of stuff going on this week. As far as the FOMC stuff, on Wednesday, we've got this interest rate decision, and right now FedWatch is reporting a 96.2% probability for a 25 basis point cut. So that's the expectation. We've got Fed Chair Powell on Wednesday as well with the presser, and then we've got all the other events that are going on. All right, let's talk about last week. The bullish case worked great. We were looking for a hold of the daily 2021 after the prior Friday close above the daily 21, and then we were looking for a recovery of the quarterly pivot. And then, continuation from there. We recovered the quarterly pivot right off the gap. I'll show you in a second. And then we tested both as support before we continued to new all-time highs this week. So I think no surprises there if anybody followed last week's analysis. So let's take a look. I've got on the left here, I've got our analysis from last week, and on the right, I've got the, what actually happened. So, we were looking for this move above the quarterly pivot, move above this 6720, 6725 area. That's been an important area, important zone. And then we were looking for continuation up. And in fact, that's almost exactly what happened. We had a little bit of, some back testing that went on, but we basically got the gap up. It kind of looked like things were going to work almost perfectly for us before we did get a back test of the daily 21 and the quarterly pivot, recovered it on Wednesday, and then it was off to the races from there. So it's looking really, really good. We have daily compression from last week is continuing. We're still seeing it here. You can see it also in the purple candles as well if you have that turned on your Pivot Ribbon Pro. And so this is coiling up for a pretty big move if we can get a continuation from here. So we're looking for continuation from there, and of course there can be a possibility of some pullbacks to the daily ribbon, hourly ribbon, and so we'll look for those as opportunistic support buys. All right. So this is our daily inverse head and shoulders that we've been tracking since back in April. If you're in the Discord, we talked about it as a speculative IHS. The right shoulder had not formed, but I was anticipating we might see a form of right shoulder, and then we could see continuation from there. Finally formed in early May, and then I think at that point it felt much more comfortable to think that it might be an opportunity for continuation to the upside. So if you're following me on Twitter, you would have seen that post. And of course, if you've been watching the weekly pivot over since the summer, we've talked about this on a number of episodes, and we were looking for a minimum upside move of 6,500 with a maximum upside move from this particular setup of 6,800, and that really depends on where you measure the neckline. If you're looking for a neckline down here, 6,500 was a nice target, and then of course if you were looking at a higher neckline, 6,800 was the target from there. So we've reached all of the potential targets for this move. Does that mean we're going to stop here? No, that just means that this particular setup is complete, and it's always nice to see things that you think are going to work out as a potential setup, particularly something like this that's much more long-term, kind of work out to where you want it to be. Anybody who's been following me for the last couple of years, we had a weekly cup and handle back in 2023, and that ended up completing as well. So I just like to get some closure on these things once we get to the end of it. Feels good. Got it right. And we can move on from here. So what does it look like when we move on from here? So last week we talked about this weekly 8-13 hold, and that continues to look really, really nice. This weekly trend is just very strong. Pullbacks have been very light so far. We really haven't gotten a weekly 21 pullback. Obviously, I still want one. At this point, we're just continuing higher, so there's really nothing that's going to pull us back unless, there's something very, very major that happens. It seems like the market is incredibly resilient, and it wants to continue to push higher. And so, we've got some targets here on these long-term levels. These long-term levels are yearly levels, so, we've already reached 1 yearly ATR, and, sometimes we can reach two yearly ATR. We did it last year. Last year, obviously, we didn't have this big thing going on. So far, we've moved a 3 ATR overall on the year, a little over 3 ATR on the yearly ATR. So that's already a pretty significant move from the bottom. But I think, we can still push a little bit higher. I'm thinking, 6,900, not trying to make a joke here, but 6,900 because this is the momentum golden gate that we have open, I think would be a minimum end of year target. That could even happen in short order. Obviously, let's have a little bit of fun with it. I know a lot of people are posting this, and I even posted it in Discord last week because it's funny. 69, 69, 69 would be the ultimate meme target. We've got 7,000 as a nice psychological target. And then, of course, we've got this yearly 7,150 plus 2 ATR target. We do have a 7,250 quarterly ATR, 1 ATR target, just above that. And I think that would be a bonus if we get that. Anything above 7,150 is going to be a bonus for this year. But that's kind of what I'm looking at. Those are the levels I'm looking at into the end of the year if we get a nice push, and anything above that would be a bonus. All right, so let's get a little bit more tactical with it as we get into next week. Now, over the weekend, we're seeing some signs of potential China deal that might work out this week. There's going to be more negotiations through the week. We've got a deadline on Saturday. But I anticipate if that does end up reaching a deal, that should be a nice catalyst for continuation to the upside. We've also got FOMC, and we also have a bunch of earnings coming in with names like Microsoft, Apple, Amazon, and Google reporting this week. So there is an abundance of potential catalysts for pushes here. As long as we stay above this quarterly pivot, this monthly pivot for this month, it'll change next month, but it'll be the quarterly pivot until the end of the year. As long as we really stay above this quarterly pivot, which is at 66.88-ish, and we stay above the daily 21, I'm bullish still. I think that, there's no reason to think that we're going to really get any downside, at minimum until we break the daily 48, but really we need to break kind of this important support down here at 65.50. So I'm really not worried about that unless we kind of get back into this box and we start to visit some of these lower levels again. Then we can revisit that and talk about it. But right now, we've recovered the daily ribbon, we've recovered the daily 21, we've recovered the quarterly pivot. We do have some important levels here. This 67.50 has been in very clean resistance. You can see it right there. We do have this gap that I think may, if we get a pullback and fill that, even a pullback down to the daily 21, I think that's going to be a viable dip. 6,800 clear resistance. We tried to stay above it and kind of fell below it at the end of the day. These are the levels I'm looking at: 67.50, 67.20, 66.88. Daily 21, quarterly pivot, kind of like right in the same spot. So let's call it 66.80 to 6700. And then, of course, 6800 for continuation upside. And we've got plenty of targets. I think we could easily get to 6850 to 6900 by the end of the month. That's completely reasonable if daily compression fires off to the upside. And something to note, we are at the top of the PO for hourly RTH. So, if we do get a pullback, look at that for mean reversion on the hourly. Hourly mean reversion gets us down to 67.60-ish, maybe 67.30-ish for kind of a deeper retracement back into this zone here to test it from the top as potential demand. We did get this hourly 48 cross. If you've been watching the last couple of weeks, this is a nice setup that we like to look at, where if you get an hourly 1348 cross after a recovery of the daily 21, usually that can end up being good pullback opportunity buys for a continuation of the upside. And of course, that did happen. I think at this point, it's buy the dip again. We'll see. There may be some extra volatility this week due to all the stuff that's going on. But as far as the chart structure, it looks really good. We got this hourly structure. If you're in the Discord, we were talking about this last week. We've got this hourly structure that's setting up. So far, it's starting to make higher lows and higher highs. And of course, we've got this breakout to all-time highs. So I'm looking for that structure to continue. And I think a higher low would be a viable opportunity for continuation towards some of those levels we talked about earlier. And that's your weekly pivot for October 26, 2025. I'll see you in the next one.